Hey, wealth creation investors and traders, Matt Buckley, the chief investment strategist here at WCI. And obviously, folks, we're still in a little bit of the aftermath of Sandy and the devastation that hit the mid-Atlantic states last week. Folks are starting to peek their heads up, starting to get electricity back, but there are still hundreds of thousands of folks without power, still hurting in a bad way. So keep them in your thoughts and prayers as well. Obviously, folks, big thing that happened last week, other than the devastation of Sandy, were jobs, right? 7.9%, the liar rate, what our politicians use to talk about the official unemployment rate, ticked up slightly there from an unbelievable 7.8%. But obviously, folks, U6 is the big story. Underemployment rate, right? 14.6%. And let's just take a look at, let's say we create jobs on an average rate of 150,000 a month, which is kind of in the ballpark of what we're doing, folks. It would take about 2 years to recover the nearly 3.9, nearly 4 million jobs that we lost in this great recession. How about this statistic? It would take 5 years at 150 grand a month to get U6 down to about 9 to 10%. It's absolutely insane, folks. So when the market cheers, quote unquote, good job numbers like that, it's like saying, you know, other than that, Mrs. Lincoln, how was the play? So jobs numbers big from last week, but here's the bigger story that obviously the media is not going to cover, and that's income, hourly income, and also working. So folks are making less, but they're working more hours. Yeah, we might be creating jobs, but it's not good. Okay, so that's what's going on strategically. And obviously with Sandy and the unemployment numbers last week, something that slipped through Wall Street's net, in my opinion, was the Greek budget that was released last week. This should scare the hell out of you. The draconian, the just absolutely wrath of God type of forecast that EU 500-pound heads were coming up with was for 2013, debt to GDP ratio in Greece would be 169%, or about 167%. The Greek government actually came out with their budget and said, no. Our debt to GDP is going to be 189%. So, needless to say, the European clown car continues. I've called for the Grexit. It's going to happen. It's not a matter of if, but when. Greece is going to exit the Eurozone, and under what circumstances. Will it be a disorderly exit or a orderly exit? Are they going to say, hey, thanks for all the money, Germany and everybody, but we're going to still keep doing our Uzo shots here? Or are they going to say, hey, we're going to get on some sort of plan to pay you all back? That is a huge deal, folks. It sets the tone for what can potentially happen in Spain and other Eurozone countries as well. So that kind of slipped through the radar as well last week. By the way, speaking of debt, we're going to hit our debt limit by the end of the year. And everybody remembers what happened back in 2011 when we couldn't get our stuff in one sock, right? So that's going to happen. The fiscal cliff is going to happen. So get ready for some volatility creeping in at the end of the year. Let's take a look at the flight schedule for this week. On Monday, we're going to get some ISM numbers. Those are going to be interesting to take a look at. They're probably going to stay in line. The Greek Parliament's going to take up an austerity package vote, and that's going to maybe this week the markets are actually going to take a look at that. On Tuesday, not too much. Obviously, the big elephant in the room is election. So get out and vote, folks, please. Stood in line for about 3 hours last week down here in Boca Raton, Florida with Mr. Seinfeld. Get out there. Make sure you vote, folks. Doesn't matter who it's for. Just you can't complain if you don't vote, okay? Also on Tuesday, Greek unions are supposed to go on strike, so that should be fun. And also on Wednesday, the EU is going to issue an economic forecast for the Eurozone countries there. On Wednesday, we're taking a look at some crude oil inventories, a bond auction, and consumer credit. This will be an interesting one to watch there as well. Some CPI out of China. Thursday, obviously, weekly unemployment claims, and also our trade balance. So that'll be an interesting look at as well. Also, overseas in China, China's their Communist Party is going to be holding a big get-together there to appoint new leaders. We've talked about this every 10 years. There's a decade change of command, and new folks are going to come in. On Thursday, I'm going to be looking at earnings out of Walt Disney, Kohl's, and Nordstrom. That'll give me a little bit of a more insight into what's going on in the economy. And on Friday, China's going to release a slew of indicators that I'm going to be looking at: industrial production, retail sales. We're also going to have that all-important University of Michigan consumer sentiment. Is it continuing to climb, or as it's forecasted here, is it going to be in line with expectations? And also wholesale inventories as well. But interesting stuff out of China, because I'm getting ready to get bullish on China again. It looks like they've kind of stabilized their sucking chest wound, and it looks like things are getting ready to turn around there. Been trading the hell out of the SPX. We've talked about the 1400 level once we breached that beachhead as being all important, and then the 1430 level once we breached that to the upside. We held it, breached it just a little bit, we held it, and then obviously we had this massive selling recently and a nice little dip in the market. Thursday of last week, we had a rip your face off rally, gave all of it back. Like I said, I called it pre-market on Friday morning. I said sell on the job numbers. That's exactly what happened. The SPUs were off about 13, and the Dow was off nearly 140 points there. So trading the heck out of the SPX here at Top Gun Options, and also trading the VIX. The VIX had a great day on Friday. Well, a great day if you're long volatility, up over 5%. And you can see Thursday's action, VIX, a huge retreat, and then a big jump on Friday. We're trading the heck out of the VIX here at Top Gun Options. Down here, when the VIX hits about 14, we get long vol, and when it gets up to here around 18, 19-ish, and we sell it. This has been a great trade for the past 3 months. If you don't know how to trade volatility, come check us out, folks. We're having just an absolute blast here at Top Gun Options. Since I took over the primary model portfolio on March 1st through close of business on Friday at the market close, we're up about $137,000, folks, and that's on average of anywhere between $45,000 and about $55,000 in model portfolio haircut. It's a $100,000 model portfolio, but on average in this paper trading account with Trade Monster, I'm trading about half that to a little more than half that. It just depends on what's going on in the market. So if you don't know what you're doing, trading volatility, come watch us. Come watch us manage our model portfolios live, real time. We send out real-time SMS and email alerts, and we also do about 4 hours of live trading each week. So going to be an interesting week ahead. Again, thoughts and prayers out to all my friends and family up there in New Jersey. I'm actually getting ready to hop on an airplane up to St. Louis. Going to be doing a keynote for Coach Fisher and Stafford and the players and coaches of the St. Louis Rams. So I'm doing that keynote, giving them a talk Tuesday afternoon at 4 p.m. So I'll give you guys a debrief on how that went. So even though I'm an Eagles fan, I'm going to go up and work with the Rams. Okay, happy hunting. Make sure you hedge, and I'll talk to you in Top Gun Options Sit Rep on Tuesday. See ya.